Are you sitting on a financial time bomb without even knowing it? While everyone's obsessing over stocks and crypto, the smart money is quietly stacking silver. And if you're not paying attention, you're about to miss the opportunity of a decade. Here's what Wall Street doesn't want you to know. Silver is more than just a precious metal. It's the backbone of modern technology. Every smartphone, solar panel, and electric vehicle requires it. Demand is skyrocketing, mines are depleting, and the supply crisis is getting worse by the day. But here's the kicker. Silver is still trading at historically low prices compared to gold. The gold to silver ratio is screaming that silver is massively undervalued right now. When this ratio corrects, and it will, early investors could see returns that make Bitcoin's rise look tame. So how much should you actually hold? That's exactly what we're breaking down today. Whether you're a complete beginner or a seasoned investor, I'm going to show you the optimal allocation strategy that financial advisors use for their own portfolios. We'll cover physical silver versus ETFs, storage solutions, timing your purchases, and the biggest mistakes people make that cost them thousands. This isn't financial advice. It's financial education that could change your life. If you're ready to protect your wealth and potentially profit from one of the biggest market opportunities right now, smash that like button and let's dive in. Let us get straight to the point because your financial future might depend on what you do in the next few months. I've been studying precious metals markets for over a decade, and I've never seen a setup quite like what we're witnessing right now with silver. The convergence of factors we're experiencing is genuinely unprecedented, and I want to walk you through exactly why this matters to you, regardless of whether you have $100 to invest or $100,000. First, let's talk about what's actually happening in the silver market right now, because the mainstream media is not covering this story the way they should be. Silver has been stuck in this weird twilight zone where it's simultaneously recognized as a precious metal like gold, but it's also an industrial commodity that's absolutely critical to modern technology. This dual nature is exactly what makes the current situation so explosive. On one hand, you have investors treating it as a safe haven asset, a store of value that protects against inflation and economic uncertainty. On the other hand, you have massive industrial demand that's growing exponentially because of the green energy revolution and technological advancement. Think about your daily life for a moment. That smartphone you're probably watching this video on right now, it contains silver. The laptop you use for work, silver. Solar panels that are being installed on millions of rooftops around the world. They're absolutely loaded with silver. Electric vehicles that everyone's talking about as the future of transportation. Each one requires significantly more silver than traditional cars. We're talking about a metal that has become absolutely indispensable to the modern world, yet most people have no idea how critical it actually is. Now here's where things get really interesting. The amount of silver being consumed by industry is increasing at a pace that's frankly alarming if you're thinking about future supply. The Silver Institute reported that industrial demand hit record levels last year, and projections show this trend accelerating dramatically over the next decade. Solar panels installation alone is expected to consume enormous quantities of silver, and there's currently no viable substitute that can match silver's unique properties in terms of electrical conductivity and reflectivity. Scientists have been trying to find alternatives for years, but silver remains unmatched in its efficiency for these applications. Meanwhile, silver mining isn't keeping pace with this demand. This is crucial to understand because unlike gold, which is primarily mined as a primary product, about 70% of silver production comes as a byproduct of mining other metals like copper, lead, and zinc. This means that silver supply is largely determined by the economics of these other metals, not by silver prices alone. When copper mines shut down because copper prices are low, silver production drops too, regardless of how high silver demand might be. We're caught in this strange situation where the market can't simply respond to increased demand by ramping up dedicated silver mining operations. The numbers tell a stark story. Global silver reserves are depleting faster than almost any other metal. Some estimates suggest that at current consumption rates, we could see significant supply constraints within the next 15 to 20 years. But here's the thing that really keeps me up at night. Demand isn't staying at current rates. It's accelerating rapidly. Every major economy has committed to aggressive green energy targets, and silver is absolutely central to achieving those goals. China, the United States, Europe, India, they're all racing to build solar infrastructure, and that race requires massive amounts of silver. Let's talk about the investment side of this equation, because this is where things get even more compelling. The gold to silver ratio, which compares the price of gold to the price of silver, has historically averaged around 50 to 1 over long periods. This means that throughout history, it has taken about 50 ounces of silver to buy 1 ounce of gold. Right now, depending on when you're watching this video, that ratio has been hovering in a range that suggests silver is dramatically undervalued relative to gold. When this ratio has reached similar levels in the past, we've seen major corrections where silver prices surge to bring the ratio back toward historical norms. But there's another factor that most people completely overlook, and it's potentially the most important one. Central banks around the world have been on an unprecedented money printing spree. The amount of currency that's been created in the last few years is staggering, and basic economics tells us that when you dramatically increase the supply of money without a corresponding increase in the supply of goods and services, you get inflation. We've all felt this at the grocery store, at the gas pump, in our rent or mortgage payments. Everything costs more, and the purchasing power of our currency is declining. This is exactly where precious metals have traditionally played their role as a store of value. Throughout human history, when currencies have been debased through excessive printing, people have turned to tangible assets that can't be created out of thin air. Gold and silver have been money for thousands of years, long before paper currencies existed, and they'll still have value long after today's paper currencies are forgotten. The difference is that gold has gotten expensive enough that it's moved out of reach for many average investors, while silver remains accessible. You can start building a position in physical silver with relatively modest amounts of money. Now let's address the big question: how much silver should you actually hold? This is where I need to be very clear that I'm not a financial advisor, and nothing I'm saying should be construed as financial advice. You need to make decisions based on your own research and ideally in consultation with a qualified financial professional who understands your complete financial situation. But I can tell you what many precious metals experts and financial strategists generally recommend as food for thought. The traditional approach that many advisors suggest is allocating somewhere between 5 and 20% of your investment portfolio to precious metals. Within that allocation, some people choose to split it between gold and silver, while others focus exclusively on one or the other. The exact percentage depends entirely on your individual circumstances, your risk tolerance, your investment timeline, and your overall financial goals. Someone who's young with decades until retirement might be comfortable with a higher allocation because they have time to weather volatility. Someone who's retired and living on a fixed income might want a more conservative approach. What I find fascinating is that some of the most sophisticated investors and institutions are increasing their precious metals allocation significantly. There are family offices and hedge funds that are moving substantial portions of their portfolios into physical metals because they see what's coming with currency debasement and economic uncertainty. These aren't amateur investors or conspiracy theorists. These are people managing billions of dollars who have access to the best research and analysis available, and they're positioning themselves defensively with hard assets. When it comes to actually acquiring silver, you have several options, and each has its own advantages and disadvantages. Physical silver in the form of coins or bars gives you direct ownership of the metal itself. You can hold it in your hand, store it securely, and you know exactly what you have. There's something psychologically reassuring about owning tangible assets, especially in times of economic uncertainty. The downside is that you need to worry about secure storage, insurance, and there are typically higher premiums when you buy physical metal compared to paper silver products. Silver ETFs and mining stocks offer exposure to silver prices without the hassle of physical storage. They're liquid, easy to trade, and convenient for people who want price exposure without dealing with the physical metal. However, you don't actually own silver when you own these products. You own shares in a fund or a company, and there's counterparty risk involved. In a serious financial crisis, there's always the question of whether you could actually redeem paper claims for physical metal if everyone tried to do so simultaneously. Many experienced precious metals investors use a combination approach. They keep a core position in physical metal that they view as their emergency reserve and insurance policy, and they might supplement this with paper products for additional price exposure and trading opportunities. This hybrid approach gives you the security of physical ownership while maintaining flexibility and liquidity. Storage is a critical consideration that people often underestimate. If you're buying physical silver, you need a secure place to keep it. Some people use home safes, though this carries risks of theft. Others use bank safety deposit boxes, though there are valid concerns about access during banking crises. There are also private vault storage services that specialize in precious metals storage, offering segregated storage where your specific bars or coins are identified and separated from others. These services charge fees, but they provide professional security and insurance. Dollar cost averaging is a strategy that works particularly well with silver. Instead of trying to time the perfect entry point and investing a large lump sum all at once, you commit to purchasing a fixed dollar amount of silver on a regular schedule, perhaps monthly or quarterly. This approach smooths out the volatility and ensures you're buying at various price points. When prices are high, your fixed dollar amount buys less silver. When prices are low, you accumulate more. Over time, this tends to result in a reasonable average cost basis without the stress of trying to perfectly time the market. The geopolitical dimension of silver cannot be ignored either. We're living in a time of increasing tensions between major powers, deglobalization trends, and supply chain vulnerabilities that the pandemic exposed. Silver, like many critical materials, has concentrated production in certain regions of the world. Any disruption to these supply chains could have immediate and dramatic effects on availability and pricing. Diversifying into physical silver is a way of hedging against these geopolitical risks and ensuring you have access to a valuable, useful commodity regardless of what happens in global trade relationships. Looking ahead, the setup for silver appears extraordinarily compelling. You have declining supply, accelerating demand, historical undervaluation relative to gold, currency debasement creating conditions favorable to hard assets, and increasing geopolitical uncertainty. Each of these factors alone would be significant. Together, they create a perfect storm scenario that could drive silver prices substantially higher over the coming years. The key is to approach this thoughtfully and strategically. Don't invest money you need for immediate expenses or emergency funds. Don't let fear or greed drive impulsive decisions. Do your own research, understand what you're buying, and build your position methodically over time. Silver is volatile, and there will be ups and downs along the way, but if the fundamental thesis is correct, and I believe strongly that it is, patient accumulation of physical silver at current prices could prove to be one of the smartest financial moves you make in this decade, so start where you are with what you have. Whether that's buying a few ounces this month or making a larger initial purchase, the important thing is to begin building your position and to do so with a clear understanding of why you're doing it and what role silver plays in your overall financial strategy. The opportunity is here right now, and those who recognize it and act decisively may look back years from now incredibly grateful that they did.